Good morning and welcome to this Wednesday, May 12th, 2021 edition of Trading Places Live at Earnings Beats. I'm Tom Bowley, Chief Market Strategist here at earningsbeats.com, and I'll be your host for the next 30 minutes featuring everything you need to know as you prepare for the trading day ahead. Well, today is going to be a very interesting day. A lot of reversals yesterday, but big economic news out this morning. And this is something that a month ago I started talking about, looking back at how inflation is calculated. You had to realize that going back into the pandemic, March, April, and May, inflation numbers were all negative. And so they were going to be replaced by inflation numbers that were going to be very strong because all of a sudden we've got all this demand, prices are going up, supply chains were disrupted. And so I said, you've got to be careful. You got to be aware of headline inflation numbers. It's really going to spur a lot of talk. And this market has been up for quite a while. So if it needs something, a story for a pullback, this is going to be it. And the numbers are big. I mean, and this is kind of what I was expecting. Inflation numbers were much higher than expected. We saw the year over year number on inflation surge to 4.2%. And I've already seen headlines, this is the worst inflation we've seen since 2008, 13 years ago. But if you look behind the numbers, you could kind of see it coming. Now, these are still big numbers. I'm not going to try to downplay it. I mean, when you start talking about, 0.9% rise or 0.8% rise, and we're just talking about 1 month, that's going to obviously have a pretty big impact on the year over year numbers. So I think the market, we had a big recovery in a lot of the tech stocks, a lot of the growth stocks yesterday. I think today could be a rough day. We'll see how things go, but this is the kind of news. And in fact, I'll go even a step further. I think it's going to have an initial bearish impact, but it's going to be very interesting to see how the market reacts because many of these growth stocks, I mean, we know the old Wall Street adage, buy on rumor, sell on news. What also flips the other way, sell on rumor, buy on news. And many of these growth stocks have already been blasted here over the past few weeks, really the last couple of months. And I think some of it is in anticipation of higher inflation, the higher interest rates that typically go along with higher inflation, and all of that. So I just think you got to be really careful here in the short term, but at the same time, use this to kind of analyze how the market is interpreting this. So I don't know how. I think we're going to start off rough, certainly with the growth stocks. We'll see how things, go throughout the day. Whether or not I'm going to look at the performance of the IWF versus the IWD on an intraday basis. Is this news going to cause folks to continue to sell out of IWF, which is growth, faster than IWD, which is value? That's going to be a really key chart to watch today because it's already taken place. So again, is it the sell on the rumor and then we buy on the news, or is this truly the start of a much bigger drop in all stocks, but especially those growth stocks? That'll be something to watch today. The numbers, if you're keeping track, CPI, of course, we'll have PPI out tomorrow. So CPI is Consumer Price Index, PPI Producer Price Index. So that's at the producer level. That'll be out tomorrow. But the CPI today came in at 0.8%. Market was expecting 0.2%. Now, I could have guessed that we were going to be higher than 0.2%. I don't think you need to be rocket scientists to figure this out. If we strip out food and energy and we get the core CPI, that came in at a positive 0.9% versus the expected 0.3% rise. So you can see the jump. The year over year CPI was expected to come in at 3.6 and it's 4.2. And that's that headline number that will try to shake and rattle everybody. When you strip out food and energy, the year over year number was supposed to be 2.3%, came in at 3.0%. We've got one more month of this next month because even though it's May, this is actually April CPI that came out. So we've got to get through one more month because we're going to remove May of 2020, which was a negative CPI, and we're going to see a positive. So if you think the 4.2% number's high, wait until next month when we see 5%, because that's probably what we're going to see. And that will really begin to spook folks. But what's going to happen is further down the road, because right now we've got these very, very low and deflationary comps that we're comparing to. What are we going to have next year? Next year, we're going to have the comps comparing these big numbers as we come out of all these restrictions because of COVID. So we've got a lot of supply chain disruptions, cutting off some supply, and then you've got all this pent up demand and everybody wants to buy everything. It seems like it's almost everywhere. And so we're going to have these really high comps next year. So all of a sudden, while we think inflation's big this year, I think next year is going to be a completely different type of animal. But this is just my opinion. I want to see how the market reacts and then go from there. But I am not ready to say, oh, there goes the secular bull market because we had a high inflation number. Again, I talked about this over a month ago. I said when we got inflation numbers in April, May, and June, those 3 months, you're going to want to watch and be careful, because you're going to have some pretty significant headline numbers, in my opinion. And we saw one of those this morning, and we'll probably see another one tomorrow. Futures right now, they have been continuing to drop. The Dow futures, now this is as of, let's see, this is as of 10 minutes ago. So I'm going to give you something a little more recent. But as of 10 minutes ago, Dow was down 136, S&P 32, NASDAQ 214. Now, one of the things that we can do, and I'll take you over to stock charts for 1 second, so hold on. Okay, should have my screen up now. So one thing at stock charts you can do to get the pre-market is simply change the sharp chart up here to symbol summary. So in pre-market and after market hours, you can get prices on stocks. So while the Dow Jones is showing me down 0.4% as of 10 minutes ago, if I type in the diamond, which is the ETF that tracks the Dow, it's down 0.18%. So it's down half of what it was 10 minutes ago. The S&P 500, according to futures, was down almost 0.8%, 10 minutes ago. And if we pull up the spider, it's now down 0.5%. So it's calmed down a little bit. The NASDAQ, which was down about 1.6%, is now down, well, this is the NASDAQ 100 anyway, down 1%. So we've definitely seen an initial jolt in pre-market, and now we're going to see a rally. Yesterday, we saw pretty significant opening decline in really across the board. And throughout the day yesterday, we saw the NASDAQ outperform and get back close to break even, while the Dow finished with a pretty significant loss. So, I mean, if you're looking at that, now I think the Dow finished down nearly 500 points yesterday. The NASDAQ, which was down quite a bit earlier, finished down only 12 points. So on a percentage basis, obviously the Dow got hit harder, but the Dow has been the much better performer. Anyhow, we'll look at all that in just a minute. I do want to just point out, those of you that are new to Earnings Beats, if you go over to our website, earningsbeats.com, you can click on this the box here, name and email address. Put both of those in, hit that subscribe button. We'll get our Earnings Beats Digest newsletter out to you 3 times a week, Mondays, Wednesdays, and Fridays. I think they're very educational newsletters, provide some trading opportunities, focus on earnings, relative strength, those types of things. But we do try to make them very educational. They're completely free, no credit card required. You can unsubscribe at any time. All right, moving on to yesterday's action. So we know we're going to have some issues today that we're going to have to try to deal with. Yesterday, however, you can see the Dow Jones, and we talked about that reversing candle. We went up through 35,000. That's a psychological number. Anytime you get to a psychological number, and to me, I mean, 30,000 was a big one, 35,000. I think when we get to 40,000, I mean, all these bigger numbers. I mean, any of the round numbers, 31, 32, 33. I think 35 maybe is a little bit bigger one. But when you see a reversing candle like that at a psychological level, we've probably made a short-term top. But the thing that concerns me a little bit more is that we've got this negative divergence in place. So you got the PPO, which is lower while prices are higher, and then you've got a reversing candle. That normally means we're going to see some selling, and we got that yesterday, nearly 500 points worth on the Dow. The rising 20 days has been holding as support, but with a negative divergence in play, I think we have a chance to go back to around 33,000 or close to it. You can see we've tested that 50-day moving average the past couple of these past couple of days or the past couple of months. We've had a couple of these tests, but I think we've got to be kind of careful here in the near term, because we've got this pullback that has started. We've got the negative divergence. We have the reversing candle. All of this, I think, is something to keep in mind and suggests that we could see lower prices. Keep in mind, we've got the 2 inflation reports. Also, remember that in the middle of the month, we switch over from the first half of this calendar quarter to the second half of the calendar quarter. I've talked about this quite a bit. Historically, this isn't just something I made up for the last couple of years or last year or 2 years ago. This is 71 years worth of data, where April 1st to May 15th has an annualized return of over 14% on the S&P 500 since 1950. May 15th to June 30th averages less than 2% of return over over the same number of days. First half of the month is anticipation of earnings and earnings. Second half of the month is the aftermath. And that's where the market tends to struggle. We tend to see money rotate more toward defensive areas. Just throwing it out there so that you're aware of it. So as we start getting all of these news articles and you start seeing all these headlines, blah, 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 well, earnings season is pretty much done or getting close to it. And we're now focused on other things. And unfortunately, we're going to have some negatives to focus on, one being inflation. Now, I'm going to, again, to me, the key is going to be the relationship, because I think the Dow is going down. I think the Dow and the S&P 500 are both going down. Does the money rotate over into the NASDAQ, which has been getting hit? I mean, look at the selling. The NASDAQ was 14,250 at yesterday's low. We were down more than 1,000 points from the high the day after Apple and Facebook reported with their blowout earnings. From that high to the open yesterday, we lost more than 1,000 points, probably, I don't know, maybe close to 1,100 points. That's a lot in 3, 4, 5, 6, 7, 8, 9, in 9 trading days, less than 2 weeks, over 1,000 points, probably 8% of the entire NASDAQ value gone in 9 days. That's how brutal it's been on the NASDAQ. And we saw this. I mean, we saw it back at the end of February, early March, same thing. Big move down, and then we came rallying back. We're getting another big move down. The overall long-term trend on the NASDAQ is still fine. But these short-term moves really make you start thinking bad thoughts. Long-term, I still feel good about the market. Maybe I'll be proven wrong. Maybe we're not in a secular bull market, but I believe we are, and I think we go higher. But short-term, not just today with the inflation news, but I really think the next 6 weeks, if we break down, if the NASDAQ continues to move down, could we go back to 12.5 and test that March low? Absolutely. And it could, and I'm not talking about in one fell swoop. I mean, we could move back up, hit the 20-day, go sideways a little bit, maybe break down, go back up, hit that 20-day again, maybe even print a positive divergence at some point, hit the 50-day, and then make our way back to 12.5. Doesn't have to go straight down, even though it feels like that's what it's been doing. I just think we could be in for a period of consolidation and selling. I do expect we're going to see a tremendous number of negative articles and headlines regarding inflation. Everyone who's been talking about inflation is going to be out screaming about inflation and how this is horrible. I would say keep your eye on that big picture, that 100-year chart, because I think we are in a secular bull market advance. Yes, we're going to pull back from time to time. Look at the S&P 500. We were at 3,700 at the beginning of March. We just went over 4,200 in 2 months, 500 points. Would it be horrible if the S&P 500 pulled back 200, 250 points? I don't think it would. I think it would just be actually maybe something the market needs, at least the Dow and the S&P, because they've been moving up so much. But again, do we see outperformance by the NASDAQ? That would really confuse the masses when you start talking inflation numbers, because growth stocks normally get hit the hardest with inflation. But again, it could be a sell on the rumor, buy on the news. We'll see how things play out. I know I spent a lot of time just talking about that, but I think it's really important. And it's not like we haven't had this discussion before and talked about this with these inflation numbers coming out. This is something that I really feel pretty strongly about, because I felt like the numbers were going to be shocking to a lot of people. And I don't think we're done with them. I think we're going to get another one tomorrow, and I think we're going to get one in June. And so we'll see how the market reacts to all this and how the rotation goes. And some of this is going to be, pretty influential, I think, in the draft next week. How do growth stocks respond to this higher inflationary environment? Because I don't think it's going away anytime soon. We're going to have these inflation stories for at least the next couple months, maybe longer, but certainly for the next couple months. And honestly, I think what's going to happen is you're going to see at some point, probably over the summer, the growth stocks take off to the upside, and everyone's going to be scratching their head. How can growth stocks go up with inflation so high? What's going on? And then you're going to see those inflation numbers come back down, and it's going to be a buy on the rumor. And then probably as the inflation comes back down, you get these big gap ups. Everybody's ready to jump in, then the market pulls back. Then you get the sell on news. I mean, this is just rinse and repeat in the stock market over and over and over again through history. Just really confounds and surprises everyone the way it works. Mid caps, small caps also down yesterday, rough day. Small caps just below the 50-day moving average. Now, we've seen that before. I think, right now we're consolidating. I think the breakout at about 1250 on the small cap index, that's held on pullbacks. I think we could move back to 1250. I wouldn't be overly concerned because off of an uptrend, you can go sideways. I think beyond 1250, the upside would take a little bit more review, probably pulling out those weekly charts. Materials, looking at the sectors, materials, the only sector to finish higher yesterday. Gap down, but it did manage to come back up and finish stronger. And with inflationary numbers and many commodity prices rising, it's not too surprising to see materials continuing to do well. I don't know how long that run goes, but I still think the dollar is going to be higher later this year, which I think will have a negative impact on materials. But so far, so good for materials. As long as that trend remains in play, I'm fine trading materials on the short, for over the short term on the long side. But if it were to break down, that's when I would start to get more careful. Energy, financials, these were the two worst sectors yesterday. Energy down 2.5% after breaking out to a new high, but reversing candles. I mean, we've seen reversing candles everywhere yesterday or day before yesterday, Monday. And then yesterday we saw a lot of follow through. Financials getting up above 38, closing above or below 38 on Monday, and then down yesterday close to 1.75%. As far as individual industries go, there were two that I thought did really well after opening gaps lower. One was non-ferrous metals in that material space. And then in technology, we had renewable energy, which has just been absolutely pounded to the downside. Finally got a reversal there. When you get a big reversing candle like this off of a downtrend, I look to that open to be very important support. So we could trend down, and we probably will with the news out today. We'll probably see, renewable energy in many growth areas down. But I think the question is, do we hold on to that 180 level? I'm going to look a little bit more at renewable energy in just a minute. Moving on to the 10-year Treasury yield. As I mentioned, the only economic news we had out today, it was bad news economically. The consumer price index rose 0.8%. Market was only expecting 0.2%. So let's see what's going on with an update here. We are now up 4 basis points on the 10-year Treasury yield to 1.66%. Still in this range. I'm going to say 150 to 175. But after hitting the 150 level a few days ago, we're now making our way back toward 175. I believe eventually we're going to break out of this to the upside. I I think with the inflation numbers that are out there and going to be out there the next couple months, the pent up demand, the increasing business, the opening of states across the country, I think all of this is going to lead to much growth. And when you have inflation scare as well, interest rates, I don't see how they go down. I think they have to go up this year. I think once we get to the point where we realize inflation is not a problem, I think that's where the 10-year treasury yield will settle back down again. But for now, I just think we have too much that would force bondholders to sell. I mean, if you're holding bonds and you see the economic activity coming and now you see the inflation report, why in the heck would you want to hold on to a bond? I see selling and I see big move to the upside. And we're going to have to watch to see what happens to the yields overseas because I like to follow the yield here in the US versus the yield in Germany. When ours goes up faster than Germany's, that is normally a sign we're going to see a stronger dollar. Now, inflation can play a role in this as well. So I don't know short term with inflation rearing its head whether the dollar does much, but I think further down the road, once we get over this, I'm going to call it like a little air bubble in the system because there's so much pent up demand. Everyone's buying and prices are going up. Supply was cut off. All these things I think are driving prices higher, which in turn is going to temporarily drive inflation higher. And that's what the Fed has discussed. So it's not just what we're seeing and how the market's reacting. We're going to want to listen to the Fed as well as the Fed talks about inflation. There are going to be a lot of questions for the Fed as these numbers continue to come out the next 30 to 60 days. All right. Let's see. Let's move on to some industry groups. We had some big reversals yesterday, so I thought maybe we'd go through and talk about some of these industry groups. One being the toys index. Now, we've actually hit a bottom. We had hit this bottom. You see the double top over here, 1,300. We came down just below, maybe 1,290, 3 occasions. I just wanted to point out toys, a big leader in 2020, has really struggled since that February high, gone down. If you look at a IWF versus IWD chart, let's just pull this up. I want you to look at, from here, February down here, we moved lower, test it, move back up and test it again. And then take a look at the toys from here, down, test it, move up, test it again. It's been almost identical to the IWF, IWD chart over the last 3 months. But it did have a nice reversal, trying to get back through the moving averages. So this will be one to keep an eye on. Let's take a look at internet stocks. Many of what the areas we're going to look at are growth stocks, but here's internet. Down to the 50-day. Look at where we topped over here in February, 3,100. Broke out, got to 3,400, and now in 2 weeks, we're back to 3,100. Tested the breakout level, tested the 50-day, put in a reversing candle. We're going to probably gap down today, again, with the inflation news. We'll see what happens, but this is one to keep an eye on. Broadline retail. Look at the huge move down. We gapped below the 50-day, essentially went down and tested this breakout area, and then reversed and came back up through the 50-day. Can we continue to hold the 50-day? That's going to be something to watch. How about specialty retail? Specialty retail had the big gap down back in mid-April, went sideways, put in a new low yesterday, but managed to come back up and close just above the 50-day. Also, on the way up, we had this zone of resistance between 2,600 and 2,500 right there. Well, that's where we've been, or excuse me, it was 2,600 and 2,650. Well, that's where we've been on this pullback between 2,600 and 2,650 with a false breakdown. So this is another area that could absolutely recover from here. So this is what makes me want to really watch today's action in terms of growth versus value. And is the inflation news already built in to what we've seen in technology? I think that's going to be really important to watch here. Because the first thing you normally think of, higher inflation, get out of growth stocks. And so We've seen that for the last couple of weeks. A lot of folks jumping at it, but has it already been baked in? We're going to find out the way the market trades after this morning. Biotechs have been on, this little bender to the downside here after a triple top around 2750, went down to 2600. Now we've tested that 50-day. Also, we had this triple top here around 2620, 2625. We've tested that on the way back down. So I think biotechs will be very interesting to watch today. I mentioned earlier the renewable energy space. The one thing that I don't like about renewable energy is that it's not really reversing at a key level. I guess maybe you could make an argument over here for this breakout at around 170. We didn't quite get down that far, but we're trending below the 20-day. This is a group that can make you a lot of money when they're trending higher, as we saw throughout 2020 and into early 2021. When they're trending lower, they're just as lethal, but to the downside. And you really want to stay away from this group until they begin trending higher. I mean, you can try to catch bottoms, but you can see what's happened the last couple of months. They work temporarily. If you happen to catch the right day, you can maybe trade it for a few days, but then it's right back down to new lows. So I think renewable energy, you want to watch that 20-day to the upside, see if we can get back through that. That would be the first step. Ultimately, I'm not overly impressed with renewable energy at this point until we can get through about 260. That would take out the recent high, that reaction high, and the 50-day moving average. There's a long way to go between where we are now and 250. So I think this is a group you still have to be very careful with. Software, we're below the 50-day, and obviously we're below the 20. The 20's coming down. This was an area, the 4,500 level, where we did make the last breakout above that reaction high. So we're going back down. We're testing that. The overall trend in software is up. It's not that software hasn't been going higher. It's that on a relative basis, it's been getting hit hard. The S&P keeps going up, and we've seen software lose 10% of its value in the last 10 days. And even when it was breaking out in April, it wasn't moving as fast as the S&P to the upside. So we've just got some rotational issues in the market. I don't think that we have bearish issues. I'm not bearish software. It's just that the whole theme, money is rotated out of it. And that's true of all these growth stocks. That really literally happened right after we had our draft back in February. Unfortunately for us and for our portfolios, everything turned and we broke down below a key relative support on that IWF-IWD on February 22nd. And it's been a challenge ever since in this area of the market. Now that we've got some news on inflation, that's why I think it's going to be really interesting to see how the market reacts here. Last one I'll show you real quick is the DJUSSC. And this is semiconductors testing the low that we saw at the end of March. I mean, here's a bigger, more important low on March 8th, down around 6,100, maybe just a little below. So if we can't get back through the moving averages and inflation does create a problem for growth stocks in the near term, then I would not be at all surprised to see semiconductors back down at the 6,100 level. That would be another 6% or so from where we are right now. We'll see what happens. But again, today is going to be pretty interesting. We open in about a minute and a half. One thing I wanted to show you, because there were a lot of reversals yesterday. If you go over to the dashboard at Stock Charts and go down to the Your Scans area, and if you don't see that, it's because over here on this gear shift, you don't have it checked. Scans and alerts. You want to make sure that that has a check in this box. If it does, then you should go down here and find Your Scans. Over on the right here where it says more, click on that. Go down to predefined scans. And then if you want to see reversing candles, like yesterday, I saw a ton of bullish engulfing and piercing candles. Well, here they are. And if you click on the number, this will give you all of the bullish engulfing candles. And if you wanted to learn how to write a scan, how do I write the scan for bullish engulfing candles? Click here to look at how the scan was written. So you can just say daily bullish engulfing equals 1. Anyway, I just wanted to point that out, how you can go back. I could spend an hour looking at reversing candles, but I just wanted to show you how you can go back and find those at Stock Charts. Piercing line, which is kind of like a half bullish engulfing. You don't completely engulf the prior day's candle, but you get about halfway through it. There are 161 of those. So you can go back and take a look at how you can do that. Now, earnings, and we're going to do a wrap up of the 3 you must see with 3 of the earnings. I want to just show you, if you go over to Zacks right here, if you go over to Zacks and you hit earnings, calendar, this is where I get a lot of the earnings data when I go through this with you during the shows. At Zacks, you can then click on, well, yesterday I want to go get the after the market stocks, after the market closed. So if you bring this day up, it lists them. You can go in market cap order and then click the time. And so some of these don't have the time, but if you keep going on, you'll see after the market closes. So these were companies that came out after the close on Tuesday in market cap order now, because I sorted market cap first, then clicked on the time. All right. And so now I can look at the bigger companies and see what's coming out. So I'm just going to pick these first 3: Electronic Arts, Unity Software, and Darling Ingredients. And we're going to go through and look at those for the 3 you must see. And then we'll see where we are in the market. Actually, with that sharp chart. So actually, I already got that set up over here. Let's go with Electronic Arts. So let's get a quick reaction, see what the market, what the stock is doing. Was down earlier. It's back pretty close to break even, so it's not doing much. It's been a sideways performer. I mean, I look at resistance 150, support around 127. We're sitting in the middle of it. From a longer term perspective, I just don't really see a pattern here. I don't see anything that makes me feel like I want to jump in or jump out. So I'm just, the stock's been a weak performer relative to internet. So that probably tells me if I want to get an internet stock, I want to go somewhere else. The second stock, Unity Software, been in a downtrend. It's getting I think this is a sell on rumor, buy on news. They came out with earnings. They beat their earnings expectation. Electronic Arts, by the way, EA, missed by a penny, $1.03 versus $1.04. Unity Software was expected to lose 12 cents. It actually lost 10 cents. So a little better than expected. Got that reversing candle. We gapped up. I think this area around 90 up to the 20-day moving average is going to be very difficult for this stock to get through. I would expect it to fail there. I'm not saying it's a guarantee. Obviously, market stocks can do anything they want. But from a technical perspective, based on what I'm seeing on this chart, I would expect to see a failure at 95-ish, 94, 95. The last one is Darling, which is a staple stock. It's in the food products area. Gap down at the open. Now it's up a little bit, 1%. Another one going sideways, but it's actually following a very strong uptrend. This has been a nice performer. The group itself, however, has continued to move up. So while Darling has gone sideways and consolidated, it's lost a little bit of relative strength. That could be an opportunity, though. I mean, if you're more of a conservative trader and you want to stay away from growth because of the huge volatility, I think a stock like this that's consolidating after an uptrend, not a big mover, something like this might be more suitable for someone that has very low tolerance of risk. All right, that is it. Let's get an idea of what the heck is going on with the market today, because I think this could really be an interesting day. NASDAQ right now is the loser, down 1%, S&P down 0.5%, Dow down 0.3%. This is kind of what I would have expected, to be honest, with the news. But now that we've got the news out, and folks are selling the NASDAQ at the open, do we see buyers stepping in for these stocks during the day? Do we see another potential hollow candle on the NASDAQ stocks? That's going to be really interesting to see. I'm going to pull up the QQQ and let's just take a look here. So right now we are a little bit above the open. With the news, my gut feeling tells me we're still going to sell, just because that headline news and all of the painting of everything being so bearish because of inflation. I can't see the NASDAQ going up against all of that. If it does, I think it tells us a pretty good story. Some things to look for on the NASDAQ, things I'll be watching. I'm going to show you a trend line here that I think is certainly worth keeping an eye on. Right about there. So we're almost down to that trend line right now. If that breaks, then I think you're probably going to be looking at that support level as the main support area down around 300. I'm going to be really surprised if the NASDAQ goes below 300. Not that I think things are, the bull market's over. But obviously that's going to be spooking people. If we go below 300, we'll definitely be into correction territory. I mean, that would be at that point about 12% down from the recent high. But then at that point, I'd want to go to the weekly chart. And I mean, if we go below 300, first of all, we got the 50-week moving average sitting at 294. So 300, we don't even go below the 50-week moving average. So that wouldn't be shocking. In fact, a move back to 300, we do have a negative divergence on a weekly chart. So a move back to 300 would actually help to alleviate that negative divergence that we had. So that's something to think about. Now, with the fourth quarter, that was the trade war. Of course, we had the pandemic, the big drops. I could see this one going back to 300. I could definitely see that. And I think the first test will be, can we hold 320? Because that's, right here. When we came back down, hit this 20-day, 20 week sitting at 321. And then if I pull up the daily chart, let's go back to the daily chart. Right around that 320 was this breakout area. So there's reason for the Qs to turn here. But we do have a negative divergence on that long-term weekly chart that would play out if we go down to 300. So anyway, I'm not sure whether that's clearer for you or more confusing. I think the key throughout all this is you've got to be careful. We're going into the summer months. Folks are already nervous about go away in May. We've got inflation. Where the second half of this quarter is now right around the corner in just 3 days. So there are reasons to be more cautious. We've had a big run. The market could use a pullback. If you've been in the S&P 500, if I was solely in, say, something like the Spider, and I wasn't a long-term buy and holder where I'm just holding forever, more of a position swing trader kind of a thing, I would be looking at all this and I would sell my Spider. I would definitely sell the Spider. That would be my thought. And I'd be willing to sit out for a little while because I do think that there are enough issues. I wrote about this a week or two ago, the warning signs that are out there, the inflation numbers. We're going to continue to hear about that. So anyway, I'm kind of rambling here, going on and on. Just keep an eye on how this day unfolds. Right now, the NASDAQ still down about 1%. All right, that is it. Let me see. There were a couple of questions before I go. I usually don't go into the questions. Why isn't XLE moving very much? Bought calls thinking with the pipeline news and more in Israel it would. Well, I mean, energy, it's been a leader this year. It's already been moving higher. If you look at the long-term relative chart on energy, that's your big problem. But I think energy still got some more room to the upside. Where is the money going if it is cycling out? Where is the flow? I guess it's a newbie question. It's rotation. In some point we're going to have folks building cash, but up till now it's been rotation. Growth stocks have sold, but value stocks have taken off, and therefore the entire market as a whole has gone higher. And you can see that growth problem with the NASDAQ, and you can see the value issue more with the S&P and the Dow. The fact that money is rotating more towards that area. Anyway, that is it for today. I want to thank everybody for stopping by. I'll be back over at Stock Charts TV tomorrow morning for your next episode of Trading Places Live. Hope to see you there. Happy trading, everybody.